Thank you for tuning in to another edition of the Vulcan Report. This report is for Thursday, August the 23rd. Right now you're looking at a chart of the E-mini S&P 500 futures contract. This is a weekly chart. And you can see as we are moving along here, we did hit a new high. And right now, what we're seeing this week is what we saw in prior sessions back in April the 6th of 2012, when we hit this 1420 area, only to correct sharply all the way down to the 1262 level. Since then, you see on the weekly chart, we have been going pretty much straight up. We have really not had too much of a correction. Wide trading zone in this area here, consolidation phase. Then we broke out, pulse wave in the weekly, and we've pulled away now from the most recent pulse wave area here. You can see we pulled away. Right now on the weekly chart, we do have support at 1386 and a quarter. So chances are we should pull back to test that area there, that 1386 and a quarter, to see if it holds. If it does not hold and it fails, our next support, major support I should say, should be at the next pulse wave at 1299 and a half. If 1299 and a half fails, then we start to get back down into the Kumo cloud. And we have first support at the Kumo clouds at the top of the cloud at 1272 and a half, and then our final support would be the bottom of the Kumo cloud at 1226 and a half. So those are your weekly support areas that you're looking for right now. As you know, you see this green bar here, this line right here. This is your price momentum bar. You can see it's now falling off. Okay? So we're now in a zone of decision. 9 times out of 10 in a bullish phase, when your bullish momentum drops off, that means you've topped out and a correction is pretty much imminent. Again, if we go back, we see the last time it dropped off, you saw what happened. Market corrected sharply. Okay, we can go back and look at prior phases here. Here's another good one here. We were in a bearish phase. Our bearish momentum dropped off. Okay, market broke out sharply. Okay, again, bullish momentum dropped off. You saw what followed. Okay, it's how the market does. Pulse waves and cycles. That's what we have. Okay, so you got to be cognizant of that. Be mindful that once those bullish momentum phases drop off, especially at new highs, you have to watch and see what happens. Okay, sometimes you get a drop off on momentum just for profit taking, then the market resumes its uptrend. Like here, you see we dropped off. Okay, didn't hit any new lows, only to pick up, hit new highs, dropped off again but didn't correct, broke out into new highs, dropped off, really didn't correct, broke out to our final phase right here. So if you're bullish up in here, you want to strongly consider maybe taking some profit off the table and waiting for the next bullish phase. You may even want to entertain a short position here as your risk is limited to the most recent high, putting your stop right above here, and you're going to look to this first support level here and then your final support level there. Okay, now let's switch our focus to silver. As you can see, make no mistake about it, silver is still in a bear market. Okay, you see a little bear right here. All right, that means you're in a bear market. Okay, had a nice breakout. All right, we have been kind of trading sideways for quite a while here. This is a weekly chart, by the way, and you see we pretty much gone nowhere, and then now we're trying to break out right here, as you can see. Okay, the question is, are we just setting up for another leg down, or are we really going to get a run here? That's the really tough question at this point, because truth be told, we really don't know. We do have resistance at this red line here. That's a major resistance level, okay, at that red line. Right now, that red line is at 3183, okay? That's where our first resistance is. So we still have quite a ways that we can move in silver before hitting that major resistance line. The next resistance will be the bottom of the Kumo cloud at 3376, which is right here. Then, of course, at the top of the cloud, we have 3798. But that's a wide range within the Kumo cloud. It's a wide consolidation cloud. Can silver get back up in there? Of course it can. Silver's a wild market. But as you can see, when the momentum waned off here on July 27th, the market broke out and never looked back. Now, July 27th, we broke out from the 2788 level to where we are now. So we're looking at like a $2 run, basically. Excuse me, off the lows. Okay. So we really have to look at now where the support is on the weekly chart. And right now, support on the weekly chart is at 2745. Okay. So if we get any pullbacks, that's what we're going to test. This red line here. Okay. That's where your support is. Can it overshoot that? Of course. Pulse wave, negative pulse wave support right now is at 2598, and you saw last time the market tried the pulse wave right in here and failed. All it did was secure the low, and then it broke out from there. So I wouldn't put too much stock in the market going negative pulse wave, not at this point. I expect for silver to continue to rise and for the pulse wave to lift up, and then we can talk about what the possibilities are. You see here, when we topped out last time, we got it, right into the Kumo cloud, broke through the bottom of the Kumo cloud, only to correct sharply once that bullish momentum fell off. Okay, so you really need to watch that. Silver can be quite the volatile market, so we need to see if it's going to have some legs to continue. Like I said, this red line right here is major resistance. All right, it's going to really struggle to get there. It's going to do its best, but that's resistance, 3183. So make a note of that. All right, and also look for shorts to come in and beat this market down. Whenever silver tries to rally and get some legs, it's always short-lived, only to get beat down. Now, last time we did good on December 30th of 2011. We hit that that low. Still stayed within the bearish momentum for the 2 weeks following. Then that bearish momentum fell off in the third week, the close of the third week. And then from there, we rallied continually, but we lost steam. So we only rallied for like a month, and then, as you can see, the market started correcting, and then it just fell out of bed. So, and you can see the double top here. See, we corrected off the low here, topped. Tested that low almost perfectly. Double top here, top, top, okay, top, and then we fell. Tested the support again almost perfectly, and now here we are today, coming up. So we're probably gonna make a run for this top up here. I think we're gonna pass this red line, pass this brown line here, and get up to maybe the 34 level, somewhere around there, between 34 and 35, before we hit another double top and fall down again. I don't think silver's going to go anywhere anytime soon. That's just how I see it for right now. Okay, looking at the gold chart, you can see pretty much the same picture. This is a daily instead of the weekly. I think it shows a better picture. You see we just pulse waved here on the black line, and we've pushed up really nicely here, and it looks like the start of something that could be, pretty decent. Last time we did it here, we bumped up against resistance and cracked right back down again. But this is a nice pulse wave. The last pulse wave we had was back in here, and you see it held up nicely for a couple of days before cracking back down again. So the metals have had a rough way to go. Don't forget, gold ran for several years and didn't look back. So this is to be expected, especially after this long consolidation back here. So we have some good support in the gold right now. Excuse me. On the daily, it's 1610.80. That's your your first major support, and the next pulse wave is at 1591.1. So we'll have to take a look and see where we can go from there. But we still have a long way to go. We're back at the 1600 level, so we're still pretty much at very significant highs when you take everything into consideration. Where gold historically ranged between $250 and $300 an ounce. So this is still quite spectacular. Okay, taking the last chart here. This is crude oil. See, we're nice extended out, pulse waving nicely from here after bumping out and breaking out from resistance from August the 8th. So doing rather nicely. You have support on the daily chart here at $94.94, and your second support, which is at your negative pulse wave, is at 91.60. So rather tight as far as range is concerned, but because we haven't broken the $100 handle yet, if we do, our next stop will be around the 110. That'll be the next resistance level, and then we have second resistance at 115. After 115, all bets are off, and there's no telling how high the oil could go. So we'll have to continue to watch that, and we are bullish, as you can see here. Okay, bullish the trend on the daily, and we have nice momentum. Kumo cloud is way down here at the 87, 88 level. So nice way to go here. It looks like the beginning of something that's going to be very long term as far as bullishness is concerned. So that's it for today. Remember, take what you can, give nothing back.